So if you look at the negative fiscal shock, of course, uh, like we said in the beginning, the Hormuz closure not only affected oil prices, it also affected fertilizer prices. And since India is one of the biggest importers of urea, and India sells urea at a predetermined price, uh, our urea subsidy, of course, increased. In the budget, we had provided for about 1.7 lakh crores. At the peak of conflict, the fertilizer ministry officials had said that probably the fertilizer subsidy will have to be doubled. So from 1.7 lakh crores, it will have to go towards 3.4 lakh crores. Of course, with now oil prices coming down, and there, let's say if we expect oil prices to remain about 85 to 90, we do expect the subsidy to come down, probably rather than hitting a 1.7 lakh crores to close to 1 lakh crores. Even on the excise duty, with oil prices now coming down, we expect excise duty to impact to be there about 85 to 90,000 crores. There is also a growth impact because earlier, like I said, India was expecting a 7 to 7.5% growth, which is now moving towards close to 6.5 to 6.7. So as growth comes down, as corporate margins shrink because of the first quarter that we saw higher oil prices and supply chain disruptions, whether you look at consumer staples, you look at pharma, you look at cement, etc. There will be a shrink of margin. So probably again there will be a shortfall in tax collections as well. So 50,000 crores shortfall in tax collection and about a 25,000 crore shortfall in or spike in LPG subsidy. These are UTI research estimates. So we are expecting about total 2.6 trillion rupees negative fiscal shock. But of course, the whole shock will not be passed on on the exchequer. If you see what the government has also done, they have raised export duty on diesel and ATF, which is expected to get about 75,000 crores. The government of India also had some cash which was unutilized from last year, which was about 65,000 crores. So they have taken that cash and they've created an economic stabilization fund, which will offset some of the fiscal impact that we're talking about. They've also raised import duty on gold, which is expected to get them about 50,000 crores net. And if you also look at RBI dividend, this year they also got higher RBI dividend than budgeted, which is expected to get them about in a total 1.97 trillion. So broadly, the net negative fiscal impact is expected to be about 60,000 crores or about 0.16% of GDP. Mind you, this assumes oil at 85. If oil were to again spike above 100, then the fiscal maths again changes. We'll have to reassess how that will pan out. But as of now,
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.